Welcome again to the Learning Portal for the DP Accounting Software. Based in San Diego, California, Database Providers proudly develops, distributes, and supports this software. This video will discuss account reconciliation, or more specifically, bank account reconciliation. We will identify why it's an important process for any business. We will define and discuss the terms bank balance and book balance. Then, we will demonstrate how to perform the bank reconciliation process within this DP accounting software. Let's get into it. The daily accounting activities of businesses involve many banking transactions. Most bank transactions are recorded in accounting software by creating and recording payments for bills from suppliers and vendors, whether payments or physical business checks, and recording customer receipts by payments or physical checks received from customers. At some point, these bank transactions recorded in the accounting software must be compared to your bank's transactions. The verification process between what is recorded in the accounting software and your bank records is known as bank account reconciliation. The bank's monthly statement for each account is used in this process. It is a list of transactions that either deposit money into your bank account or remove money from it. Reconciliation is essential because it compares the bank's information to the transactions in your accounting software. The ultimate goal of reconciling your bank statement is to ensure that the bank transactions match what is recorded in the accounting software. This process provides a solid foundation for the accuracy and reliability of your financial records, giving you peace of mind in your financial management. Let's now discuss some terminology that is part of the reconciliation process. The first term is bank balance. It is used to identify what the bank shows as a starting balance and ending balance within the statement they provide. Bank statements include a statement beginning and ending date identifying the period for the statement. So, based on this period, the bank ending balance will be based on the account beginning balance at the start of the period plus all deposit records within that period, minus all withdrawals within the same period, along with adjustments like bank account maintenance fees, interest, and overdraft protection fees. The next term is book balance. It is used to identify the balance within the account register of the accounting software for the same bank account. The account register has a rolling balance, which is identified after every bank transaction. Payments made are recognized in the account register when they are issued, not when the supplier or vendor receives the monies in their bank account. Similarly, monies received from customers paying invoices are recognized by the date received, not when the monies arrive in the bank account from the drawing account into the bank account. Is the bank statement balance always equal to the bank register's balance at the end date of the bank statements for a specific bank account? The answer is no. It rarely is. Here is an example explaining the difference. A business deposited 3 checks in the amounts of $100, $100, and $200 at the bank on April 30th, 2024. Your bank register shows these 3 checks deposited on April 30th, 2024. Therefore, the book balance, register, increased by $400 on April 30th, 2024. The bank records the 3 checks as a deposit the next day, on May 1st, 2024. In the monthly bank statement for April 2024, ending on April 30th, 2024, these 3 checks are not included. Therefore, your bank statement balance will be $300 less than your book balance as of April 30th, 2024. Let's demonstrate the reconciliation process by performing one for the May 2024 checking account. We will step through the entire process on this small set of transactions. Click on Reconcile from the Banking module on the main menu. Select the checking account. Notice that 2 prior reconciliations have been completed. Select one to see what transactions were included in that reconciliation. To see the other reconciliation transactions, click on it. To reconcile the next period's bank statement, click the last statement, then click Create Next Statement. A new statement record is created. The beginning balance is taken from the previous period's ending balance, and the beginning period date is taken from the last period's end date plus 1 day. Enter the bank statement's ending balance and ending date. Then click Save. Notice that the account statement list has been refreshed and shows the new statement that was just added. Click on this new statement. The register details will list all transactions that have not been cleared up to the statement's end date. Notice that several transactions from a prior period appear. If they never appear on a bank statement, these are big red flags and require research. The next step is to go through the bank statement, find the matching transaction in the register details, and check them as cleared. Since most bank statements are grouped into withdrawals, deposits, and others, we will start with deposits. To help focus on just the register details of deposits, we will click Show Only Deposits. All deposits in the statement have been identified and cleared. This includes those few transactions from a month ago that cleared in this period. Notice that after checking a transaction is cleared, the deposit or withdrawal section is updated, along with the reconciliation difference. Remember, the goal is for the reconciliation difference to be $0. Moving to the next section of the statement, we click Show Only Withdrawals. With this filter on, it is simple to go down the list and check off those in the bank statement. The stragglers from the last period have cleared. However, this transaction has not yet cleared in that period, so we leave it as is or unclear. Moving to the last section of the statement, we see 3 entries. 2 are bank fees. One is for the monthly maintenance service fee, and the other is for mailing the statements. The third entry is for the interest made during the period. To add the bank fees, click on Add Fees. Notice the party or bank, the bank account and expense account default. Add the date of the fee, review, or edit the reference to provide details of this specific fee, and then add the fee amount. Click Save and Add Next, because we have a second fee to add. The following fee is for mailing the statement. Add the fee date, revise the reference appropriately, and then add the fee amount. Click Save and Close to return to the reconciliation process. Now that these fees have been added, you will notice they appear in this reconciliation and are both marked as cleared. The statement's deposits, withdrawals, and reconciliation difference have been updated. Furthermore, you will notice the book period deposits, withdrawals, and book ending balance change. The last item in the statement is for the interest made within this period. To add the bank interest, click on Add Interest. Notice the party or bank, the bank account and income account default. Add the date of the interest, review, or edit the reference to provide details of this specific interest, and then add the interest amount. Click Save and Close. Again, now that this interest has been added, you will notice it appears in this reconciliation and is marked as cleared. The statement's deposits, withdrawals, and reconciliation difference have been updated. Furthermore, you will see the change in book period deposits, withdrawals, and book ending balance. The good news is that the reconciliation difference now shows $0. This reconciliation is now complete. Click on the Reconciled button to flag this reconciliation as complete. The account statements list is refreshed and now shows reconciled and the date marked complete. To see the reconciliation details and uncleared transactions in the account registry in printable format, click View Reconciled Statement. This will open whatever reconciliation is selected in the account statement list. The top section identifies the account and the period range for this reconciliation. It also concisely summarizes the bank statements, including the beginning balance, total deposits, total withdrawals, and the final balance. The account register, also known as the book register, is detailed, showing the book register beginning balance, the total amount of deposits and withdrawals in the account register, and the book ending balance for this period. It also clearly identifies the unreconciled amount, ideally $0, and the difference between the bank statement ending balance and the book register ending balance. Note that the difference shown here should be the sum of uncleared deposits minus the uncleared withdrawals. The following sections are grouped by the details of all deposits, followed by the group of withdrawals, all cleared in this period. The last 2 sections provide uncleared deposits up to the reconciliation end date and uncleared withdrawals up to the reconciliation end date. Once you've reviewed the information, you can easily print it by clicking the Print option in the Access menu above. Alternatively, you can close the document by clicking the Close Print Preview in the Access menu or the X in the top right corner of this report. To close out the reconciliation, click the X in the top right corner that returns you to the main menu. Thank you for watching this video. We hope you now understand that bank account reconciliation is important and should be completed promptly. Understand the difference between the terms bank balance and the account balance, or book balance. Using the DP accounting software, be able to create a new bank account statement reconciliation, complete the account reconciliation process, and view the reconciliation details in a printable format. If you found this video helpful, please please like it. In addition, click subscribe below so that you can be notified when we release new videos.